If someone showed me this video years ago, I would have saved myself a lot of time, money, and mental clarity. But most videos like this are complete nonsense trying to sell you a total fantasy dream lifestyle of making your phone into some sort of ATM. Look, as someone who's spent many years learning the ropes of this game and eventually building the biggest brand in all of TA, I can tell you that just simply learning how the game of trading really works is already 50% of the process to being on the winning side. The first mistake you need to avoid is trading without a good understanding of the game itself. And to be as real as possible here, the best way to describe trading is as a zero-sum game. Meaning for each winning trade, there's another person on the other side that's losing just as much. Now, a lot of people will disagree with me on this opinion and say it's technically false, but I think it's just actually the best way to look at it overall, and it's a strategic perspective to develop. You need to look at trading like a competitive game. There are winners and there are losers. You need to look at the market itself as some sort of machine that keeps everything balanced and puts all of these principles in place. If you don't develop this perspective now, well, you will eventually most likely learn it the hard way, which is by losing trades and then doing more research over months and months. When people say they trade like the banks, particularly in the Forex community, it's not meant to be really taken literally, and it's mostly all kind of nonsense, but there is some good truth in the concept of that. Because the way to really win the game is by looking at the market for opportunities where you know the majority of people are actually going to be losing money. And that's the harsh reality of this game. The real way to win, fundamentally speaking, is to find where most people are likely to lose, and then play on the opposite side. A perfect example of this, of course, is in the crypto markets. You'll see this happen a lot every single cycle in the crypto markets. It gets very euphoric. Everybody's expecting it to go up and up, higher and higher. And the smart traders know that a lot of people are most likely to lose money here, so they bet against them and essentially take their money. Now, the second mistake you must avoid is using too many indicators. And this is quite a common one and definitely important for me to mention, since there's almost 100 different options available for indicators to use with just what Lux Algo has developed. There's also hundreds of thousands of indicators available across all charting platforms, and if you can't learn to just simplify your strategy with a couple of these, well, it's unlikely you will win in the long run. Sensory overload is a real thing, and it's not even the risk of losing more trades that I'd be worried about for someone who trades with 10 indicators on their chart, for example. It's actually the analysis paralysis I'd be even more concerned about. If you have so much on your chart that 3 indicators are telling you the market is about to reverse, while another 2 are telling you the market is bullish, and 4 more are telling you something else, well, it's most likely you're just not going to know what to do. And my suggestion is to always first just experiment with a bunch of different indicators, ones that are lagging, ones that are leading, ones based on price action, and then just decide for yourself what you want to use and when you'd want to use them. And the only way it's acceptable to have 10 or 20 indicators that you actively use is if you know specifically when you use them, like what market condition is each indicator most useful for. And if you can understand all of this, then you'll avoid the mistake of just using way too many on every chart and messing literally everything up. Less is often more, a lot of the time at the end of the day in trading. Now, the last mistake, guys, is overtrading. I think this is one of the most common ones and something that I would hope every trader can at least be aware of. Not only to help you become more profitable, but also to give you more of a peace of mind when participating in an activity like this. Some things you need to understand is that you don't always need to be in a trade. Staying out of trades consciously is actually very smart at certain times. For example, if you know that volatility is going to be low, or you know the market is going to be ranging for a while, you could just acknowledge that it's way more likely for you to get chopped up while the market is like this. Or to put it more simply, you know you trade better when the market is trending, so when you suspect the market is going sideways and there's a lot lower volume, Just stay out of the market until there's something more interesting happening, a significant breakout is occurring, or if a new narrative starts to develop fundamentally. So all three of these mistakes I've mentioned here, from overtrading, using too many indicators, and just not understanding the game itself, is something that I experienced trading early on, but I also see people that I know personally making all of these mistakes. So whether you're a beginner or experienced already, I hope this video at least gave you a deeper understanding of how things work. If you want to learn more about why people aren't profitable in trading, then click this video right here. I guess that's all for now. Thanks for watching, and I'll see you guys in the next one.